Hello, everybody. Um, just giving some minutes to the rest people to join. Okay. So good morning, everybody. I am Orlando Rodriguez, a market analyst in the Refinitiv Agriculture Research Team, and I'm going to be talking about the corn market as a feedstock of the ethanol in the U.S. So will be in my part, and I will be talking about the feedstock as the corn, and then I will hand out to Shamik, who he will be talking about the ethanol market. So my main points in my presentation will be that Russia's invasion of Ukraine is leading to the tightest session in corn in years. The soaring prices of corn is changing the U.S. corn demand and the South America limited corn supply. And also, I will be talking about the 2022-2023 corn market outlook for the United States. As I mentioned, the Russia's invasion of Ukraine is leading to the tightest season in corn in years in the corn market. So here, as a context, Ukraine this season harvested its largest crop ever at 39.1 million tons this previous fall, according to the Refinitiv data. And the USDA projected a corn export of Ukraine for the season of 33.5 at the beginning of the season. After that, Ukraine has shipped 18.5 million tons of corn from October to February prior the invasion. And however, we can see the chart here. This is the corn season in Ukraine, the red line. So it has a stop here when the Russians started to invade the country. However, this historical high corn export that Ukraine was having led Russia's invasion has closed Ukrainian ports, and they will remain closed during this situation. And as a result, approximately 50 million tons of future Ukrainian corn export could be blocked or delayed. This add to the weather-related production losses in South America, as we will be talking about a little bit later. With these slides, I wanted to show the Refinitiv flow data from Ukrainian corn. So traders have exported a minimum corn quantity, if we can see, by train and seaports, because the seaports remain blocked. So if you will be able to reach the graph, it sees how from February to March the exports are declined extremely. But in general, corn export have stayed stagnant since the beginning of the Russia's invasion. However, on March 28, Russia promised to scale down the military operation in Kyiv and Chernihiv. So this negotiation occurring in Turkey appeared to be the signs in the peace the first time in the peace negotiation process, and the corn market it took this as a real change of progress, making prices a little bit better for the corn market. But what we were still in watch is that the spring planting, including corn, will commence shortly in Ukraine this April. So if the war continues, this spring planting could be affected significantly. And of course, the reduced corn area and the production in Ukraine could be impact the global supply over the upcoming season. So a little bit has been talking about that the farmers, they have been able to reach a portion of their lands, a portion of their farms, but it's very hard for them to get their input for the corn, their fertilizer, the tractors, because the Russian military, it's still it has a lot of presence in the country. So so these soaring prices have changed the U.S. corn demand as well, which affects the ethanol market. So these corn prices have been reacting to the crisis since the Russia's president Putin started to move troops close to Europe, and the production losses in South America began to be noticeable. If you can see like how the futures of the corn have been reaching a lot. It has been increasing the last month, and on March 9, the seafood futures are 7.4, and the highest contract in history. We're almost reaching the highest contract in history, which was in August 2012. This situation, it's likely to change because on Thursday, the USDA will release its acreage reports, its acreage intention, and the peace talks in Ukraine also are changing the corn market. So the big changer here for the corn prices will be tomorrow USDA report. The market is looking at, and the USDA also, the more analysts thinks that 92 million acreage for corn would be the area for this upcoming season, but we will be talking about this a little bit later when I talk about Refinitiv estimates for tomorrow report. So changing the demand, I wanted to start here by mentioning that you can find this new demand side analysis on the icon page, and we're going to be publishing our monthly market report. So we are kind of developing the corn market analysis from the demand side, and we divided the demand side in the three most important demand categories for the corn, which are corn exports, feed and residual, and of course corn for ethanol. So we started the last quarter of last year to develop this monthly forecast, and one of the most important forecasts, of course, is the corn for ethanol. So you can find this monthly analysis in the demand side of the analysis. When you go to food and agriculture, you go to grains, and then you go to the corn page, you click on analysis, and then on the demand side, you'll see ethanol use and feed and residual. Then if you go to flows, you'll find the exports analysis, the export forecast computed in our team. So this is the analysis on this page focus on the corn demand for ethanol production. So we look more something like from the feedstock perspective, and our team has developed an econometric model for the U.S. corn-based ethanol production to forecast the corn demand to produce this biofuel. So the data sources for this analysis included but are not limited to Refinitiv, the USDA, and the Energy Information Administration. So, and the variables that we include are about the U.S. corn supply data from Refinitiv. We use domestic transportation, demand trends. We use oil prices. We use macroeconomic indicators, and also we use regulatory developments and trends are analyzed here. We have found in our research team that that the markets moves from that the market expresses economic movements, and the economic movements are expressed in these econometric variables which we analyze. So what we do is we analyze these variables, and we can see how the consumption will be, or have an idea at least how the consumption will be in the upcoming year. Since this is like a corn-based analysis, we divided this analysis in the corn in the corn market year. So here the blue columns represent the USDA reported data, and the green line with markets represent Refinitiv estimates. So what we do after we computed this forecast, we compare this with the USDA data reported for corn for ethanol use. Besides of this, we display weekly ethanol production levels, average ethanol markets, and which Shamik will be talking about, of course. So basically a regression analysis with time series data from these factors mentioned is used to produce the ethanol production forecast, and then it's converted to corn. So once the season begins, also we start to develop a consumption pace analysis that take into account the weekly corn consumed to produce this biofuel. For instance, as of March 18, the accumulated corn consumption for ethanol closed at 3,028.8 million bushels, which we do this pace consumption analysis to compare with previous estimates, with previous consumptions. So these levels by this moment are 92.6 million bushels above the 3-year average, and this is 290 million bushels above last season at this point. So based on this pace, we can compare to the previous season and develop a forecast for the rest of the season. So our current consumption forecast, it's at 5,391.9 million bushels, which is this is above the 42 million bushels above the USDA March WASD report, and if our analysis is correct, will be 69 million bushels above last year. So as the pandemic, it's coming, like it's not ending, but people are going back driving, although that the oil prices and the gas prices are soaring. We have seen a little bit of increase in demand, which is kind of normal in this part of the year. But with COVID restrictions are being lifted up, the ethanol demand follows the gas demand, which this is also impacting the highly use of the ethanol, which Shamik will talk about more in detail. So based on our analysis from the feedstocks, the market drivers are set to increase the production forecast. But the ethanol market is highly policy driven. So as you may know, like by the end of January, the Environmental Protection Agency expressed their compromise to increase the use of biofuel. But on the other hand, the Biden administration announced that they are analyzing the waiver of the biofuel blending mandates. So because of the tightness of this corn season, so Refinitiv is closely following the final decision on the blending goals to measure this impact on the corn consumption for ethanol. And we look at our variables in very detail, and based on our analysis, any policies at this point will have a significant impact in the short run for this season. On the one hand, the ethanol prices, for example, have been below the gas for 15 years, and in 2018, fuel supplies, the refinery supplies did not voluntarily expand the ethanol when it was 70 cents cheaper than the gas, which is just they would not do it now. And on the other hand, in 2017 and 2018, the industry was allowed to blend below 10%, and they choose not to. So this indicates that they wouldn't do it or otherwise if the mandates are being lifted in the short run. Now, a mandate of E15 would change things, but this is not the topic on the table right now. So let's talk about the other part of the corn demand, which is the corn consumption for feed and residual use. So we forecast this is the corn feed to the animals, going to the animals. So this page in ethanol in ICON provides analysis focused on this corn demand. So again, we established an econometric model based on Refinitiv and USDA data. And for this one, we take into account the corn supply. We also take into account the corn consumption for ethanol, the total grain consuming animal units. We use price ratios for all the livestock categories, which the price to feed ratio, it's a huge indicator of the profitability of the livestock industry, which take into account the price of the product, let's say the pigs, and the price of the feedstock as it is in corn right now. So the higher the price to feed ratio, the higher the profitability of the industry, and the higher the consumption will be. So based on this model, we're forecasting 5,585 million bushels, which is below the March. It was the USDA report, and this will be 12.4 million bushels from the previous season. So we are seeing, we're following closely the livestock industry here in the U.S., and it's been harmed by the soaring corn price. So what is happening, taking a look for this price ratio, it's that the corn prices have risen more than the product, than the livestock, which leads to the lower price to feed ratio and impacts the profitability of the industry if the feed is more expensive than the product. So they are lowering their expectation as these corn prices stay high. So now that we covered that, so we are looking for this high corn price is changing. The farmers in this kind of situation will prefer to export their corn rather than feed it to the cattle in this kind of situation. So this is what is happening when the corn prices are very high. So the demand is changing from the feedstock to the exports that we'll be talking about this right now. So we have to mention that the global food prices were already at 10-year highs during the COVID pandemic, and the Ukrainian war worsened the global food situation, making a situation very similar to, or kind of similar to, the 27 and 28 world food price crisis. So with the war, corn demand remaining steady, all the significant producers are interested in keeping the exports ongoing. All the majors corn producer want to export their corn, but still, no one wants to be the one to run short of supplies by being the only country exporting. What is good here that the U.S. has enough supply to increase its exports. We look back in the world food crisis in 27 and 28. The U.S. exported 19% of its production, when the production for the last, where the average for the last 10 years exports has been 14. So in previous food crisis, so the U.S. always export a big portion of their corn. So export impatient for the U.S. corn has increased in the last couple of weeks of March, which China being the latest destination here. So you can see the brown bar. This chart on the right. It's the monthly corn U.S. export by destination, and the brown chart is the China destination. The The red one is Mexico, and the blue one is Japan. This is the biggest country. So last season we have a historical high export season, and you can see that it's mainly because of China demand that is been steady in the last couple of months, and it's starting to increase from October. You can see how it's starting to increase, and that's why in China it's a big Ukrainian corn buyer. So with Ukrainian not being able to export their corn, China it's looking at the US corn right now, and also South America production losses has been huge. So with these very low supplies from South America, which are the other two, Argentina and Brazil, the other two major corn exporters, the world demand is looking for the U.S. corn. So we recent the exports, which is to 68.8 million metric tons, which is 5.3 million metric tons above the USDA March projections. So yeah, this is what we're looking at. We're looking at the higher export season, lower feed and residual use, and a higher demand for the corn for ethanol use for the United States. So let's talk about the U.S. corn supply. So these numbers are Refinitiv estimates for the 2022-2023 U.S. corn supply. These estimates are being released today as we talk, and this will be compared to the acreage the report that the USDA is going to release tomorrow. So our Refinitiv agriculture team, it's forecasting corn production at 380 million tons, which is down 1% from the last season. So based on the current economic data, the estimated acreage of comparing crops as soybeans and the baseline yield projections, we said this production, which is below the USDA release on February in the Ag Forum report. However, we'll be looking at that tomorrow. Again, it's very important report tomorrow. And the USDA planted area in this Ag Forum are forecasting 92 million acres. So very similar our estimates. However, the difference will be that the U.S. We estimate that the U.S. farmers cut back on their corn for the first time since 2018. It's mainly because of high input costs and the global supply chain disruptions. So despite of the potential shortages caused for this ongoing war and caused by the bad weather in South America, we are estimating that the farmers are not going to put a lot of fertilizer because the fertilizer are going to be a high cost. The fuel, it's going to be up. So we are looking at very similar corn acreage report. However, for the production, it's a little bit down due to the lower inputs in their yield for this upcoming season in the U.S. So to wrap up things a little bit, I just wanted to mention again that the Ag team publishes a corn market outlook every month. So you can find it on Outlook. So to see like the main drivers of the corn market happening monthly, and we also publish for forecast for each of the consumption as well as the production. So these are the main points to conclusion. So spring planting, it's very important for the Ukrainian. We are following these peace talks, the negotiation between Russia and Ukraine will be very key in order to see how the Ukrainian corn will be planning. And we are foreseeing a higher corn consumption for ethanol. We see that the shrinks in the U.S. corn production area amid the high fertilizer prices. So this is all I have from me, and with this, I hand it out to Shamik. So thank you so much.
Hello, everyone, and good morning. And thank you so much to my colleague Orlando Rodriguez for that excellent outlook on corn for the upcoming year. And I'm going to go a little bit down the stream from corn and get right into ethanol. And as you all know, this has been quite the year. In fact, if you look back, 2020, we had the onset of COVID. 2021 in the U.S., we had weather problems at the beginning of the year. And of course, 2022, we have our own fresh set of challenges that Orlando has discussed at length, and I will discuss some more. So it seemed about the right time to have this type of discussion with everyone and to see exactly what's going on with corn ethanol market in the U.S. and also around the world a little bit, considering that U.S. is the largest ethanol exporter in the world. So you have to look at what other countries are doing with their ethanol in order to get a complete picture. So I wanted to start, first of all, talking about ethanol supply, and then we're going to go into ethanol demand. And then we're going to go look into ethanol pricing that we do here at Refinitiv and we publish on Icon. And then, of course, I was going to look at some ethanol challenges and finally conclude on a good note with some ethanol opportunities that everyone has in the U.S. So, also, another thing I want to point out is that a lot of this data that I'm going to go talk about is actually in my U.S. Weekly Ethanol Report that I publish on Refinitiv Icon. It's available in the Icon Commodities Document Library in the U.S. Petrochemicals and Biofuels Report folder. And it's also available each EIA release day, which is usually Wednesday, except on holiday weeks, which is on Thursday. And you can find that on the Energy Dashboard in our Refinitiv Icon. So let's start with U.S. ethanol supply. So U.S. ethanol supply, if you look at ethanol stocks, I have some graphs here which break down exactly what's been going down with stocks for about the last year or so. If you look at the graph on the left, you can see U.S. weekly total ethanol stocks have been pretty high compared to where they were at least at this time last year. If you look at the price, if you look at the stocks right now, they are the highest they have been since April 4th, 2020, when the stocks were at 26.337 million barrels. And of course, let me go ahead and state that this data is as of March 18th, 2022, which was the last EIA release day. Actually, while I'll be talking to all of you, the EIA will release new numbers, but we're going to go with the latest numbers we have, which as of now is March 18th, 2022. So you can see what stocks are doing right now there. And then we also have broken them down by PAD, which is the Petroleum Administered Defense District. And this basically breaks down the United States into 5 regions. And if you look at the graph on the top, or the line on the top, that's for PAD 2, which is the Midwest, which is Chicago. That's the main trading hub for PAD 2. And you can see that those stocks have been soaring quite a bit. They are usually, that market never really ever got past, let's say, 9 or even 8,000 barrels back in the day. And now it can't really even get below 10,000 barrels. Oh, and I should go ahead and mention, I've actually been working in the ethanol industry since about 2007. So you can see that, to me, like a lot of these things, these are very, very new developments and new dynamics that we're seeing that did not exist before. Another example of that is that PAD 1, which is the East Coast, and PAD 2, usually they kind of were neck and neck as far as what the stocks were doing. You'd have 1 week, PAD 2 would be on top, 1 week it would be PAD 1. You can't really say that's the case anymore. PAD 2, there seems to be just a glut of ethanol really in the Midwest and not so much in the East Coast. And if you look at PAD 3, that's the Gulf Coast, you can also see that stocks have been rising there too, and a lot of that has to do, especially with PAD 1 and PAD 3, with export markets, considering that those have the New York Harbor and the Houston port there. So that's what a lot of the product moves to those pads. And in PAD 5, which is the West Coast, you have mainly California responsible for a lot of that volume, and it's really due to their not only to the federal renewable fuel standard, which is the biofuels mandate that I'll get into later, and but you also will get into the low carbon fuel standard, which is California's own biofuels mandate that they have, And so that also influences how much ethanol they take, which is usually it's a positive impact for their ethanol volumes. Now, if you're looking at U.S. weekly ethanol production, you can see that, if you look at this graph, it looks like, okay, it's kind of been faltering a little bit in the last couple of weeks, right? And if you look at Q1 of 2022 this year, the average was really 1.023 million barrels per day. But if you look at Q1 of last year, it was 906,000. So it's actually, even though it looks like, okay, maybe in the last year, after a big jump in October, it's been faltering, but really it's been chugging along quite well. As as Orlando mentioned, we have a lot of corn to dedicate to ethanol production. So producers have been taking advantage of that, and also with the increasing biofuel mandates, which I'll get into later, you're always going to have a room for more ethanol. So you can see that producers have been taking advantage of that. Now, when you get into U.S. ethanol imports, now you can see the imports I've done on a 4-week rolling average, because what happens is that if you just do the weekly numbers, it comes in very, very choppy and doesn't give you quite a clear picture of what's actually going on. And so for the U.S. ethanol imports, we are, as I mentioned earlier, the largest ethanol exporter in the world. We didn't actually used to be. Back when I started, it was actually Brazil that was the top king of ethanol exports, but ever since about 2007, 2008, that dynamic switched, and all our corn led to all this ethanol being produced and exported out of the U.S. So given that, we don't really take that much in import, nearly compared to how much we do in export, but almost all, the vast majority, if not all, the ethanol imports that we have are from Brazil. And because they're the only ones that actually have a lot of ethanol to export. There's no other country that really has as much as the U.S. and Brazil to as much capacity to export ethanol as those two countries. And for the U.S. ethanol imports, for the first quarter of 2022, they clocked in for a total of 349,480 barrels, so just south of 350,000 barrels. But for Q1 of last year, you had about 485,000 barrels. So we are importing a little bit less so far this year with an increasing mandate. So we're going to see how much that increases in the later of the year when you have the mandate that you have to meet and all these volumes that have to be obligated. So the U.S. ethanol blend market share, this is a number that the EIA technically puts out, but that I have basically taken a new a viewpoint on it. So the ethanol blend market share shows you weekly gasoline production and how much of that weekly gasoline production is ethanol being blended into. Now, I must go into a little bit of a clarification here. It's not the blend wall, which I will get into later, because the blend wall tells you what is the blend per gallon of ethanol. This tells you basically what is the ethanol, how much of the total gasoline production, not per gallon, but total gasoline production is being blended with ethanol. So it is a little bit different number. So you're going to see here, you have the 12-week high for total gasoline production lately, with a 5-week low for ethanol blended gasoline production. And for Q1 of 2022 so far, you have that at 9.123 million barrels per day. And in Q1, it was 8.474. So production has really started taking off this year, and you're seeing more ethanol being blended into the gasoline supply. Now, the ethanol diesel supply is another number that I actually have come up with here using a various number of variables. That's a tricky sentence. But let me go ahead and explain exactly what I was trying to do here. So for the diesel supply, what you have to do is you take the EIA stocks number and you divide it by a demand number. Now, the demand number, when you take the EIA's information, I'm not exactly hot on it because their trade information isn't so good. And as we all know, trade is a part of supply and demand. So I've actually married their numbers to our Refinitiv Icon flow numbers for ethanol and backed into using inventory supply, backed in stocks to go into a demand number and to get the ethanol days of supply, because you divide the stocks by that demand number. So given that information, what we can see here is the ethanol days of supply have been pretty high, especially when compared to last year, especially right now. But here's the interesting part: is that when you look at the average of the first quarter of this year, and you look at the average of the first quarter of last year, it's really very, very similar. Even though March 18, 2022 was a 3-week low. Just on the weekly basis. But if you look at the quarters for this year, it was 26.7 days of supply for the first quarter. And for last year, it's 26.9. So only 0.2 days. That's not much of a difference at all. And it's actually a little surprising. So essentially, a very layman way to put that into, layman terms is to say that, we're about as tight or long as we were last year. We're not any tighter. We're not much tighter. We're not much longer, really. So that's U.S. We just got done with U.S. supply. So of course, let's look at demand. Now, for demand, you have the U.S. ethanol days supply, like I said. I pressed the wrong button. Sorry. U.S. ethanol exports. Here we go. For exports, so these are the countries that we've been exporting to so far this year. The export profile is generally a lot larger, which is usually why every year I actually organize ethanol export into regions. For example, I'll say so much is going to North America, South America, Middle East, South Asia, East Asia, Far East Asia, Australia, Pacific, Europe, etc. Because it gets kind of cumbersome to just print out 50 countries every time of listen. So it helps our friends out in shipping because it tells them exactly which regions are getting the most ethanol. So for this year so far, we have Mexico and North America as being a big recipient of our ethanol. And South America, of course, Brazil, because they have their own mandate, as we'll talk about later. And Peru, with the same deal. Egypt also has been taking our ethanol exports this year, as has Sweden. And India is a large one is an interesting one to talk about because they are a major export destination. And this has only been really a big news story in the last year or two. Before that, it wasn't so much. But, other than India, you'll have the Philippines in the Pacific. And then in Asia, you have South Korea. And rounding out Europe, you have Sweden and Greece in there that have been taking our ethanol so far this year. Now, if you look at the ethanol exports numbers, now most of our ethanol exports are actually, right now for this year, they're going to India. But its largest destination is 767,310 barrels, as you can see. And the next two leaders are Peru and Mexico, with Peru 168 and Mexico 153. Brazil actually has been taking about 144,000 barrels, and South Korea about 112,000. So India is definitely the vast majority, and the rest of them are actually kind of at parity with each other as far as how much they're going. But as you can see from the graph, India is the leading destination. Peru was actually a leading destination in last year too, and they're starting to be one here this year. So generally, back in the past, when I was first covering, it was just usually just a lot of U.S.-Brazil talk as far as ethanol goes. It's a kind of a two-way street. But now it seems like the India and Peru have been really taking their place as large export destinations for U.S. ethanol. And if you look at the 4-week rolling average of U.S. ethanol exports, which is just like I explained with imports, it's the same thing where you want to do 4-week rolling average because otherwise it doesn't really give you a clear picture of really what the exports are doing. It comes in as a very choppy graph. So we are exporting a lot less than last year. So far in this year, we were exporting 73.7% lower than first quarter of last year. Specifically, if you want to get the numbers, this year we're only exporting 1.551 million barrels. And last year for this quarter, it was 5.905 million barrels. So exports have been really coming down. And there's a lot of factors in there, a lot of more global factors than that, and some weather factors too as far as why exports haven't been exactly rolling around this year. And you have to also consider that U.S. domestic demand has been a lot larger too. So speaking of U.S. domestic demand, here's the U.S. ethanol blend wall, which you might remember I mentioned earlier. So this shows you exactly how much out of each gallon of gasoline demand is ethanol demand. So for that, of course, you kind of have to look at gasoline demand at first. So for gasoline, because it's tied to gasoline demand, right? Ethanol, it's blended into gasoline, so that's how that works. So if you look at gasoline demand here, you can look at, I have a graph of the last 5 years on the left, and it shows you, what, and if you're looking at that big plunged down, that's the COVID year. That's 2020. That big line. So that's an interesting thing to always look at, and kind of messes up the ranges for my graphs all the time, because you have to go all the way down to near 5,000, because that's how low demand was when we had the onset of the COVID pandemic. So for this latest reported week, which was the latest data I had, March 18th, is 2022, it was 8.5% higher than the same time in 2021. And year to date, we're doing 8.9% higher than 2021. So you can see that even though there was the COVID year, and then, of course, the restoration of demand in 2021, and then now we're even just surpassing that. And in fact, we're getting very close to the previous years before we even realized that COVID was a thing. So you can see that. And then, of course, you can see our ethanol demand on the right lines up against that. And our ethanol demand is 10.4% higher than it was in Q1 of last year, which is really, really chugging along, right? I mean, ethanol demand was 947,000 barrels per day this year in Q1. So that's, almost 950. And for last year, it was about 858. So, like around 850. So that's doing quite a bit better than it was last year as far as ethanol demand goes. And if you look at the blend wall, our blend walls, which is, again, it basically, how we approve E10. So technically 10% is the lowest that you can blend at. And it is approved up to E15, or the EPA, which I will go into later, talked about that too. So we've been consistently rocking between 10 and 12% on the blend wall. And for this quarter, it's actually been 11% for the blend wall. And for last year in this quarter, it was 10.8%. So, but the blend wall has been sliding in recent weeks, though, as demand has been improving or gasoline demand has been improving against ethanol demand. But on the whole, the blend wall is a lot higher than last year. And this actually influences a lot of RINs buying, because when the blend wall is high, then you want to buy, the RINs, which is the renewable identification numbers that obligated parties can buy instead of blending ethanol. And so when you have a high blend wall, that's more incentive to buy a RIN than when you have a low blend wall. So another part of the 292 of the demand is the U.S. biofuels mandate, of course, called the Renewable Fuel Standard. Now, when I first started, actually, it was this is technically the Renewable Fuel Standard 2, which actually was adopted in 2007. The initial one started in 2005 and was very, very basic, but it has grown by then, and it's even stopped being really legislated by it. Even though Congress has to technically pass the RFS each year, the volumes are set by the EPA, and I'll go into that again later. So for the proposed volumes for this coming year, which were the EPA released this on December of last year, which means that they'll take a comment and review period and then finalize the volumes later on this year, usually with a lot of controversy, as we've seen from the last couple of years, because no one's ever really happy about these numbers ever, it seems. So this is the proposal for this year. It's 20.77 billion gallons of total renewable fuel, which means that's the whole shebang. That's everything. So of that 20.77 billion gallons, 11.47 billion gallons is the corn-based ethanol requirement, which is pretty high, and it's actually reduced from what it was supposed to initially be, and we'll see that later. And then advanced biofuel is and by the way, I should go over this corn-based ethanol, especially since I just mentioned RINs. They're usually talked about like D6. They're put in different categories, and they can count towards other. The lower the number, the more flexible that RIN is, and I'll get into that in a little bit. So for corn-based ethanol, you have it 11.47 billion gallons. Now here's the thing: corn-based ethanol cannot count towards the other categories, right? But they can count towards corn-based ethanol. But so you basically have to have a base of 11.47 billion gallons of corn-based ethanol. Then you get into advanced biofuel, which in the past was just basically sugarcane ethanol from Brazil, which is the D5. And now it's been expanded to include some other little niche products, but for the most part, it generally is still a Brazilian sugarcane ethanol. We don't have enough sugarcane here, or really any sugarcane here, to grow any type of viable ethanol production, so that we have to import it from Brazil. And the reason that is because the carbon pathway for sugarcane Brazil is supposed to be lower than the carbon pathway for corn-based ethanol. And then, of course, you have biomass-based diesel, and you're thinking, why are you talking about diesel? Because this is ethanol presentation, right? But no, if we talk about diesel, because the D4, which is this category, they can actually count towards the advanced biofuel if you can't import enough. And actually, that has been the case pretty much for the last several years, where you don't have enough of the 5.77 billion, so you take that 2.76 billion gallons and then some, because usually the biofuel production has been surpassing whatever the mandate is, and they use that to count towards the advanced biofuel. So that's the reason I bring that up. And also, I should mention that there is a cellulosic biofuel proposal, which is 770 million gallons, which is just a fraction of these. And it's cellulosic is one of those things that ever since I started in this industry, you think that they always said that, oh yeah, we're going to get viable production just right around the corner, and that corner never really came. I don't know if it's a round room or what, but it's still, the technology is not there yet to where you can make a economically viable gallon of ethanol from all that biomass that you need, like for switchgrass and everything that goes into cellulosic. So let's get into pricing now. So this is the U.S. ethanol forward swaps, and this is something that we at Refinitiv have started doing. We started about at the middle of last year, and this is daily ethanol forward swaps. This is not spot pricing. I have to say this is based off the exchanges, and this is what these are financial instruments, really, not physical costs. But we use them because we have this steady sources for them, and we can actually publish them. So these are our U.S. ethanol forward swaps pricing. So you can see on the left, we have the daily front month ethanol forward swaps pricing for both Chicago and the New York Harbor. And prices have really just been influenced. Ethanol is really, a lot of people want to tie it to the gas price. It's not really tied to the gas price. It's really tied more to supply and demand. And of course, part of that supply and demand is the corn cost, which, Orlando did a great job of talking about before my presentation. So you can see that here. And of course, the corn cost, as he mentioned, has been influenced by a whole bevy of things, the Russian invasion of Ukraine being one thing, which, wow, what a topical presentation to do right now, right? That's what's so exciting about all of this. And so you can see that it has propped up the price a little bit in the last couple of weeks for the daily front month ethanol forward swaps, which would be the balance of the month for March right now. And then also I wanted to talk about this price spread here, because the price spread between Chicago and New York has gone all over the place in the last year. Typically, when I would say the average for whenever I was really in the industry was 7 cents per gallon, what they say. That's how much it costs to truck out ethanol from Chicago, or rail out really, ethanol from Chicago to the New York Harbor. So 7 cents per gallon, you can see it was around that last year. And then what happened is at the end of last year is the prompt supply got so tight in Chicago that it really blew out that spread. So that's something to glean from this. If that product ever gets tight, that it can affect the spreads to other regions in the United States, and it becomes kind of like a domino effect. And you're actually even seeing. So you saw the price spread it got as high as like 67 cents at the end of last year, but now it's actually around 5.5 cents, which is still, it's almost a little lower than 7 cents per gallon. So, but if you look at the forward months, like if you want delivery in April, May, or June, that starts getting more towards a 7 cent per range. So that tells you that there are things that are going on that are affecting the price spread, but that is something that traders in the market definitely look at. Now, ethanol challenges. I'm going to go into what some of those are. So the Rfs Challenges, okay? This is something that is a challenge. These are retroactive volumes being proposed, and of course, just like the 2022, I have to stress that these are only proposed. They have not been finalized yet. That'll come later this year. But as you can see, they're finalizing volumes from 2 years ago, right? They're doing the 2020 and the 2021. They're doing 17.13 billion gallons. That's a proposal. And these are all reduced volumes, by the way, from the initial one because of the demand destruction of what happened to COVID. And then 18.52 billion gallons for 2021. And for 2020, it's corn ethanol is about 9.5 billion gallons. Advanced biofuel is about 4.6 billion gallons. Biodiesel about 2.4 billion gallons. Cellulosic is 51 million gallons. I mean, like nothing. In 2021, corn ethanol It's about 10.2 million gallons. Advanced is about 5. Biodiesel about the same, 2.4. Cellulosic 62. So you're gonna have this. So you have these volumes that are being proposed, and I actually remember back in, I want to say like around the mid no, not mid 2000s. I would say like maybe around 2010. There was a period where they did retroactive volumes again for 3 years, just like they're trying to do right now. And I just can't imagine this has to be an accounting nightmare for somebody to do these retroactive volumes. But there was a case earlier this year with American Clean Energy versus the EPA, where they actually successfully ruled that the volume should have been a lot larger than whatever they had proposed earlier. So the EPA is actually proposing, get this, they're proposing a supplemental standard of 250 million gallons, and it's not exactly part of the RFS, but outside the RFS. It's like a little escrow, basically, of production that you can use to retroactively add to those years. So that whole thing is just a big headache, and of course it's brought on by the destruction of demand. But we'll get into what challenge that presents again, more challenge that presents too. So, and Orlando did mention this: the small refiner waiver. That is also a challenge, because a lot of the small refiners and even some of the big refiners were asking for waivers for the RFS because of the RINs prices and how high they were getting. Because RINs, even though they do follow supply and demand to a degree, they're also largely speculative and largely emotional. So, for example, I remember one day a Wall Street Journal article came out about how RINs were tight and the price went up 30 cents that day. And it wasn't even like, it was just a speculative article. It wasn't even anything based on anything that the EPA released or anything like that. But just because of that, it risen 30 cents. And so what happens is that a lot of these small refiners, they were caught on, up a creek, basically. And, but my point, I get what they're saying. I'm a little sympathetic, but at the same time, I know there's a lot of small refiners that actually didn't get, posed by RINs, and they actually were able to, do business. So when they do the small refiner waiver, part of me thinks that, well, if you're just better at if you're better at trading, you wouldn't need this waiver. But that's still something that's definitely going on, and I don't think that conversation is ever going to go away. Especially now there's been that bee's in the bonnet, it's going to get trapped. And then gasoline demand volatility. So I've always thought the renewable fuel standard should really have been set as a percentage of gasoline demand rather than fixed volume, because what happens if demand completely gets destroyed one year, just like it has? And this is what we're seeing right now. This is why we're getting retroactive volumes. This is why we're seeing people go back and do all these headaches. And I think there needs to be a larger conversation about having the RFS as a percentage rather than total volume. Otherwise, it's just mathematically going to be a headache almost every year. And like I said at the beginning of my presentation, every year we've had something crazy going on. So so tying it as a percentage of gasoline demand, I think, kind of erases that, and it gives a target for producers. Granted, it is a moving target, and maybe that is part of the issue. But then also, I can't believe that can't be a larger issue than what's going on right now. And also, corn, the RFS is still largely dependent on corn ethanol. The goal was to move it away from corn into stuff like advanced biofuel and into cellulosic, but we just don't have the technology to catch up. And I don't know if everybody was just too optimistic at the beginning. But right now, we really need corn ethanol, and even though it's more carbon intensive than supposedly than sugarcane ethanol, we still do need corn ethanol to fill our RFS, and that's not really going to go away anytime soon. So another thing, so we talked about COVID-19 effect earlier. So this is what I want to show you. This is what happened to COVID, or happened to the ethanol demand when COVID hit. You can see that at the beginning of the year, we didn't know anything. Then right around April, which was actually my birthday, so that was fun. That's when that's when the lockdown started happening. People were driving at all. And you can see it was almost like a weather event, which I'll get into later. But then you can see people finally figured out where, okay, we can get back out. We can do certain things, but limited, of course. And demand never really caught up the rest of the year. You can see that what it was before the drop and what it was after the drop, it definitely was on a decline. Though it did recover, but it still did end up being on a steady decline. And then the weather impact, of course. You have the U.S. weekly ethanol production, and I'm showing you what happened here in February of last year. We had a huge freeze in the United States, where even I live in Houston, in Texas, and even our electricity went out. Everything was bad. My toilet water froze in the toilet. My sink was frozen. It was so bad, and you can see that actually affected ethanol production. And so weather is an impact, and it can produce it. Even if it's not, first of all, it could wipe out the corn, and that would affect ethanol production too, of course. But this plants couldn't run really when it was that cold, and it did, of course, recover and been chugging along since. But that's something that now we do have to watch out for, is that we can't have these extreme weather events, and we have to be prepared against them because of situations like this. So for ethanol opportunities, let's end this on a good note. So here we're talking about, here's some countries that do have significant ethanol programs that we've already been exporting to. You can see India there, you can see Mexico there, there's Peru, and there's Brazil. So in India, okay, they have a mandate of E20 by E25, and they actually achieved 8.1% blending in 2021, and the government started allowing the use of potable alcohol towards fuel. Before they had all this neutral alcohol they couldn't really use towards fuel ethanol, but then they started opening that up, and that really started getting things going there. And the current capacity right now is 681 million gallons. And the Indian government did approve in 2022 75 new projects for an almost additional 500 million gallons. But here's the thing. Sugar in India, it's even though that's what they use, it's all sugar and sugarcane molasses. And my parents are from India, so I can say this with some level of expertise. India consumes a ton of sugar. They are the second largest sugar producer in the world, but they are by far the largest sugar consumer. And sugar, as some of you may know, is a tricky crop. Sometimes if you have too much water, that can be bad, and of course, too little water can be bad. So with this dependent on sugar and the fact that their consumption of sugar is so much, they will definitely take a lot of ethanol, and they have been taking a lot of ethanol from the U.S., and because even the U.S. doesn't have an E20 blend. E20 is very ambitious, and so this is probably the most aggressive mandate in the world right now, and that is why they're taking almost all our ethanol. Oh, no, not almost all our ethanol, almost all our exports, I should say. Brazil, of course, they eliminated the ethanol tariff through December 2022. This just happened on March 24th, actually, so not even a week. And it's a result of high gasoline prices because, gasoline, they have gasoline A and gasoline C. This gasoline A is all pure ethanol. Gasoline C is a mix of ethanol. And gasoline B is just pure fuel, but no one ever uses that. But because of the high gasoline prices, they've eliminated the ethanol import tariff, so you can see a lot more export going toward Brazil. And Brazil sugarcane and Brazil's sugar prices and sugarcane crop difficulties have led to lower production also in Brazil. As you can see, its total ethanol production in 2021 was projected 13% lower than 2020. And then also in Peru, duty, you can see the countervailing duties. They used to have them against the U.S. because they thought that the U.S. was dumping ethanol in Peru, so they wanted to protect their own industry. But actually, because of also what's been going on, they actually repealed that countervailing duty. So that means that there's a lot bigger channel. Even though Peru did take a lot of our ethanol last year, we can send it even more this year because of this repealing. And they've had an E7.8%. The Peru duties were about 15 cents per gallon on the countervailing. So 15 cents per gallon is considerable. Because of that gone, you definitely can expect more exports to go there. And they've been blending at E7.8 since 2013, which isn't, if you look at most countries, it's pretty good. But compared to the U.S. and of course India, it's not as high. But also, just like a lot of the sugarcane countries, they have a very tight sugarcane supply, so they have problem reaching their own mandates with their own sugarcane. And then Mexico, I want to talk about. They've been taking a lot of our ethanol, but they only really have an E5.8 blend. And see, MTBE is also a major competitor for ethanol in Mexico because MTBE is an octane booster. It's methyl tertiary butyl ether, and it's used in the United States due to a whole slew of bad press, and that's a whole other presentation, really. But generally, it's not used in the U.S. anymore. But other countries, such as in Asia and also in Latin America, such as Mexico and Venezuela, do use MTBE, and so that cuts into the ethanol market share because they compete as blend stock. You can't really have both MTBE and ethanol in the same gas tank. Mexico did have a chance to increase to E10 in 2020. But it failed in court, so we can expect at least lower blends in E10 in Mexico for at least some time. South Korea also, they were a major export destination. I didn't put them on here, but I want to mention them, get them an honorable mention, because they accept a lot of volume. But here's the thing: it's almost like the Netherlands in Europe, where South Korea, they're a transshipment device to Southeast Asia, because Ulsan, the polar Ulsan, they can take a large capacity tank vessels that many Southeast Asian ports cannot. So what happens is those large tanks go to Ulsan and they get shipped to Southeast Asia from there on smaller vessels. Because those ports can handle those smaller vessels. So U.S. domestic ethanol opportunities. Let's see. There's a U.S. So here's something. Let's talk about the higher ethanol blend, right? We can try to do a higher ethanol blend, but even I was researching this. I was looking at this, and because I was like, E15 was approved 10 years ago. I mean, that's a while. And even when it was approved, it was such a quiet approving. I remember, like, even car companies didn't really announce it at all. All you could see was, like, on the gas cap, they would say, like, E0 to E15 approved. And that's how you know the E15 was approved. There was never no news thing because the automakers and fuel distributors, they have been very resistant to increasing even past E10 because there have been issues with older cars with rubber hosings and gaskets where it was negatively impacting those. But there have been Biofuel tests for E20. A lot of the colder states, which like to rely more on biofuels, like Minnesota, because they have a lot more farmland and everything like that. So they've been running favorable tests for E20, but there's been way too much resistance for E20 because, like I said, it took a long time for E15 to get approved, and that was 10 years ago. And E20 from the automakers, from the fuel distributors, from the gas station people, from everybody, there's just going to be a little too much resistance. So that's not something that we can really rely on is a general approval 20 anytime soon. But there are regional ethanol price opportunities, and like I mentioned before, there are times when the price spread, can vary. So you can see, like, for example, if the price spread is low, then you can send it out to other regions. And like I mentioned earlier, New York Harbor was about 7 cents per gallon is typical. To ship it out from Chicago to Houston, it's about 10. And of course, I use Chicago as the hub because that's where that's where the Midwest is in the U.S. and that's where the vast majority of ethanol production is. And then it used to be the cost to truck it or to rail it out to the West Coast was about 23 cents per gallon. But of course, these could all change now with the basically the new surge in gasoline and diesel prices that we're seeing because of all the global socioeconomic factors and political factors. So, but these are typical of what it was, and that's why people monitor these spreads, because once those things change, it can either become very advantageous or very disadvantageous to export out to these regions. So, and to say just the U.S. is really unlikely to increase past an E15 blend. So exports will remain a significant and sizable opportunity for U.S. ethanol because of all the burgeoning ethanol programs and because our production is quite strong right now. And that's it for me. And thank you all for listening today. I hope you really enjoyed this.
Thank you so much, Shamik. I just wanted to add that the presentation will be available. We'll be sending the slides to all the attendants. So thank you so much for that. And also, I wanted to take the advantage of this little time to mention that from the ag perspective, these studies that I mentioned are new developments, and we're currently looking for feedbacks from you clients that we know that you are the experts. So we will be so happy to reach out to you in order to get feedback and start improving and creating more analysis. We're also will be looking to develop more forecast analysis and more consumption analysis for the crush, for the soybean crush in the U.S. So that will be taking a lot the biofuels, the biodiesel, which now it's a huge part of the crush demand. on the soybeans for the ethanol, so for the industry, sorry, for the biofuels. So thank you so much, and thank you so much, Shamik, for this great presentation.